Yo, what's up, everybody? Man, oh man, feels good to be right. So, yeah, prices pretty much went to every target that we've painted out over the weekend up to this point. We have actually came back to levels that I've been calling for, the last like week or so, since it failed to stay below this low. That being the new day opening gap, which is here, right from December 11th. And then we have this regular from October of last year. It's up here. We've been talking about these equal highs, how I don't think that they'll want to leave that available, even if they were to really tank it like aggressively. We've had this perspective for quite a while, for good reason. What the hell is going on with my thing? Some weird glitch going on. I guess it doesn't matter. Oh. So yeah, like I said, pretty much every single thing that we've called out or called for has unfolded. For those of you that have been paying attention, it pays to pay attention when you're around people that have proven that they know what's going on. And for years, I have done just that. Not only me, but my students too. So if you're new here, put it to the test. Don't take my word for it. Just because I'm saying something, it's great, but lots of people say stuff on the internet. But the things that we do here, just from this month, it's been kind of chaotic. But through the storm, we have still been able to call price and be correct on where it's going to go, whether it was confirming. You can't hear me, huh? Wonder why. Can all of you guys let me know in the chat if you can hear me? Not too sure. Says I'm good on my end. Okay, yeah, so it's going to be on your end, Rodri, if other people can hear me. I thank you, Dave. I appreciate you for helping me out. Welcome, by the way. I'm not sure if this is your first call with me, but welcome. You're definitely in a place that you're going to get a lot of value from. I can guarantee that. So yeah, welcome. Any of you guys that are new, welcome. If you're not in my free Discord, that's where I've been sending out, or that's where I do send out a lot of stuff. For those of you that aren't in my private group, I still give you bias and narrative. I give you, markups, tell you what my opinion is, where I think price is going to go still. But of course, in my private group, we're live every single day. So every detail, everything that I'm thinking at every moment of every day, of every week, it's actively promoted. I think I do remember your profile picture, Dave. Yeah, I think I do remember. But yeah, welcome. Hopefully you guys have had a reasonable January. I've gotten a lot of messages over the last couple weeks of people kind of having somewhat of a struggle, which is to be expected. Those of you that have been with me for a while, at least since last year, right, or like 3 to 6 months ago, You guys know that I've been saying that the conditions we're in relative to the first quarter starting, the new year starting from November, December, going into January is generally could be a bit difficult. It could be a bit chaotic because, again, smart money, for the most part, doesn't really start aggressively making moves until a little bit deeper into the year, right? In February, last week of January, first week of February, which is ironic that it's the last week of January and we see that this huge move is taking place. Just goes back to the fact that, there's truisms in the marketplace with seasonality. And, the seasonal influences are going to start kicking in pretty aggressively for the better parts of the year. Just like it kicked in for November, December, and this month, right? The first beginning parts of this month. It could be a little bit chaotic, so we've seen that. Has it thrown us off too aggressively? No. Have we been able to call bias and narrative every day and find something? Yes, right, which I've proven every day in my private group and then here on these calls. And then every weekend we've been correct on narrative. We've had kind of a light bias off of this drop here. We had to see how these upper levels were going to be respected. I labeled this gap in here, the 50% of this up movement, and this wick in here as 3 PD arrays that shouldn't get violated if price was going to continue to go lower. What happened? Price ended up smashing ahead of that. Or if we go to the weekly chart, right, as I've been laying out, we have this drop. It took the low and then broke above this, which it should have acted as a breaker if it was going to have a significant decline, targeting something like this, right? It didn't do that. So it got up above, changed state of delivery again, inverted this breaker candle, dropped down into the bullish order block here, right? Respected that. Dropped down into this wick again on this weekly chart, respected that. That's bullish order flow in the plainest sense, right? Just reading the PD arrays, not anything too overly complex, just looking at the relationship that the PD arrays are having with one another and whether 3 or more of them have been violated on like this time frame, right? Because if 3 or more are violated on the weekly chart, you could rest assured the price is not going to go in that intended direction. It's going to go towards a direction where it broke those PD arrays. ICT says if 3 PD arrays get broken and you're trying to force your narrative, the next thing that's going to be broken is your backside. I can't cuss on this too much or too early in the call because YouTube will come after me on some nonsense. But hopefully that makes sense, right? And then this week, as we've been walking through this, this early part of the week, we were talking about and pointed out this wick here. Wanted to see if we could stay below or stay above this, right? If it's going to go higher, it did, right? Well, this was last week, right? So it closed up above this low, basically coming off of this lower portion of the wick, right? The wicks do the damage, but the bodies tell the story. This clearly tells us a story. We're in a range-bound environment, so we've had to be kind of flexible and okay with us being incorrect about price continuing to go higher if it did choose to continue to smash below like this wick, get back below this low, and then maybe even violate this, but it hasn't done that. So price has been bullish. DXY has been overwhelmingly bearish for many reasons, right? And so this candle opened up, dropped lower. Yesterday, we saw this in the moment, saw that it was failing to do a delivery through this 50% level. And then prices pretty much accelerated. So again, this order block's respected. This breaker was disrespected, right? The wick here was respected here. Price dove lower just to liquidate this level, but it still remained on a closing basis above the 50% of this. We're now above this level, right? We're also above this week's new week opening gap. Okay, we have relative equal highs up here. Price has not broken structure to the downside. It wicked through this, but it didn't close below it. So that was potentially going to be a breaker, but it wasn't, right? If you go back to this time, back in November, when I started talking about how things are going to get a little more chaotic, you can go and see all the conversations we were having about this and how we stuck with the bias being bullish, right? And then just short term, it was just digging down below this, and then it just, you know, consolidated a little bit up to this point, and now we're starting to open up in the last week of January, which is generally when things can start to open up. Good morning, Fred, by the way. Good morning, everybody that may be new. But yeah, so all this stuff that I've just laid out right here, I've been talking about for weeks, right? I've been pointing these things out. It's not something that we just woke up today and figured out. Like, we've been bullish for a reason. We've been cautious just in case our 3 PDA rule would be violated to the downside, in which case we would then start to seek sell-side liquidity. That has not manifested, so we've stuck to our narrative as we're supposed to. You're not supposed to flip-flop back and forth every day. Narrative changing, right, or directional, you know, like directional objectives overall changing requires time, right? It takes a while. And a lot of times, you know, it takes a news event, right? Like, to react from a PD array or to a PD array, like in this case, when it dropped lower, generally that's instigated by a news event, right? One of the red folders. News events, the red and yellow folder, or red and orange folder news events, when you're looking at things from the higher time frame, are used as macros, essentially, for the higher time frame. That's a perspective that nobody really has, but it's a truism. They need institutional sponsorship to move from these big levels. So it's reasonable to believe, especially when you do your back testing, you'll see this, but it's reasonable to believe that news events are important in that sense as well, right? Sometimes, you know, price moves without them, but a repetitive way of viewing how to use the news, or a different way of using the news that most people aren't using or thinking of, is to look at them as macros from these higher time frame moves. So if you're trying to take like a delivery to a weekly low or weekly high, or one of the other PD arrays, like in this case, it reached down for this order block, but then again, it also targeted this low. That requires, for this big move to take place, a news event, because that's when we know scheduled institutional sponsorship is in the market. It's an excuse for them to do what they're trying to do. Okay, get to one level or the other. Right, but again, this whole narrative that we've been talking about, aiming for these equal highs, there's a regular trading hours gap up here. I think I have it, yeah, right here on this chart. We have a failure swing. We've had SMT between the 3 indices, so of course that's been a reason for us to be calm about things and not be too aggressive when looking for executions in a particular direction, especially because this was consolidated with the SMT at the start of the year. So we've had contingency plans that haven't really been necessary if, you know, price was going to drop, but we haven't really had to use it. Okay. So another thing too, you see that I have Friday's high and Friday's low outlined. I mapped that out on Sunday. I told you guys to watch those levels because those are going to be our really important liquidity pools before any of these extreme levels are targeted. And we can see that this week is a pretty solid example of how important the weekly highs and lows are, right? Or Friday's high and Friday's low going into the new week. You see that we opened up. What did we target? Friday's low. Also, some of this price delivery down here as well, right? It traded this high and to that low as a balanced price range below this liquidity. So it came down, tapped into it, still respected it, and then closed back inside this gap here, right? The new week opening gap, right? And then price started to push away, getting back outside of it to the buy side. Then you can map this out as a market maker buy model, which we talked about yesterday in my private group. We called a amazing buy yesterday, which ran, I think, like 170 plus points. Now, if we count this as well, I mean, it's ran over 200 plus points. You know, let me see if I could go pull that up. Where did it go? This move was a little bit before, right? But that ended up continuing to go higher. This was on, yeah, this was yesterday. This was yesterday, right? We were talking about the same thing here, right? Price got up above that, and we called a buy here at a breaker, right? High, low, higher high, fair value gap, stop run, right? And it just continued to rise. And this was at 25,706. Okay. If we come back to the chart real quick. $25,706. We were right here before price even moved up. We were using this fair value gap here because it's on the daily chart, right? It's over here. It's an inversion. We were navigating inside of that. We have new week opening gap here. We got above that. And then we have all these levels down here being respected, plus DXY aggressively repricing to the downside. The currencies, GBP and Euro, rallying to the buy side. Let me see. Bonds and yields are not really being too helpful, but even the bonds ended up running to the buy side, recovering a little bit. So all of that, and at the same time that this is moving higher, right, or looking like it has a chance to go higher from the new week opening gap here, new week opening gap here, and then like I have on the other chart, the fair value gap in here, all those levels, price was staying above. We did this wick down and then closed back inside. That's not heavily indicating that we're going to go to the downside, unless it was to violate this low, which is something I talked about the other day in my private group. And then we also have this weekly bullish order block that price traded basically back down into, and also a new week opening gap from, was it January 2nd, 4th and the 2nd, okay? And it just respected that. So all of that, and on top of the fact that we stayed inside of this, allowed us to continue to believe that bullishness was not over, especially from that weekly chart. All of that was happening with the backdrop of the weekly candles, the weekly chart price action looking like this, respecting the 50% of the wick, liquidating this low, closing back above it, and then attempting with that drop that we just looked at on this week to get down into the 50% of this wick, but failed to do so. And then we got up above this previous candle's close and the high, which was Friday's high. So all of that, again, is heavily indicating the price is going to continue to go higher. So what was happening? Did we look for shorts or buys? We looked for buys only, right? And our narrative has been bullish, right? So that's some of the under the hood ideas and analysis and reasoning behind why I've believed yesterday and today and for the last couple of weeks that this up here is still a potential target that I think is going to be tapped into. I've been anticipating this since the start of January. If they were to go lower, I've wanted to see them target this. This is highly inefficient. The new day opening gap, like I showed you guys a second ago, right up in here. And then we have a new, a regular trading hours gap. If I was to go to, say, the 4 hour, kick on our regular trading hours gap indication right there. See, we have that gap in there that's above equal highs. That's very reasonable, especially right now, for us to see that get targeted. Okay, so that's why we're going to stick to the bullishness. That's why we've stuck to more so bullishness, but have had contingency plans because you got to be flexible. So yeah. So hopefully all that makes sense. And let me know if you guys can see everything okay. Is the quality okay? Just double check if you guys can hear me okay. Just want to make sure. And just a reminder, if you guys get value from the content, if you could do me a favor and like the video, subscribe to the channel if you haven't already, so you don't miss another live call. It's much appreciated. It helps me get in front of people that need to hear these types of conversations. All the time we have very important conversations, and reality checks. But then also, we have a lot of consistency and many, many, many things that can help you be a better trader, which has been the case for over 200 traders at this point, who've both worked with me privately or just simply here on YouTube. So if you guys could do that for me, I'd really appreciate it. Only if you get value from the content, not just because I'm telling you. If you don't get value, it is what it is. But if you do get value, if you could do that, that's, like I said, much appreciated. Let me see, is there any questions? No, okay. So yeah, again, hopefully everything makes sense. It's very much a repetitive process here on this channel and in this community. I don't really change things up a lot because I have something that works. So there's really no reason to add or take things away or do too much because it's pretty solid the way that it is. The process, it's easy enough to follow. People can learn it. It's purely ICT concepts. I have my own recipe. Like ICT says, he gives us that ability to create our own recipe. And I think we have a pretty phenomenal recipe here, from bias and narrative to entry to precision entries to risk management to just everything in between. We have an answer for almost everything in the market. And again, I prove it, unlike many people. So yeah. Yo, good morning, George. Good morning, Mike. Appreciate y'all hopping on. So yeah, hopefully you guys have had a good week. We do have gold that played out as well. I called gold yesterday. I said we were going to be bullish. I have screenshots of that if you wanted to go double check. But everything that we've called out, every single asset that we've touched this week, pretty much all of January, has ended up going to our initial targets. Again, it just goes back to the system being what it is. It's provably accurate, and long term, we're correct more than we're not. So are you guys. Those of you that stick with me or have stuck with me for a while, you've seen the value. You've let me let the chart speak and not have to be on some crazy antics, to get people's attention. It'd probably pull more people, but that's not going to make you money, right? I can't promise you're going to make money. Of course, I'm not a financial advisor, but if you're doing something or using something that works, depending on how you operate with it, the question of whether this stuff works is not even a question anymore, right? It shouldn't be a question about ICT in general, but every ICT trader has a nuanced approach using using his concepts. But at the end of the day, the charts speak very loudly when it works, and it also speaks very loudly and very obviously if things are being used incorrectly, right? And we do this every week, right? So yeah, we called out gold to be bullish. I have some students that followed that and took trades on that. DXY, again, I said that I would have liked to see a little deeper move up into this wick up here, but the gap was so large, they really didn't choose to go too deeply. But then I wanted a candle like this, right? It seems that we're getting something very similar. It just didn't take out this current high. And if it did, it would have basically did exactly what I painted it to do. The start of the week, rally up first, then the second one, maybe pierce the high and then decline. It just seems that it's exceedingly weak, which is why we haven't been able to get on this high before it ended up declining. So, but nonetheless, everything, again, that we've painted has played out. So what's behind self-sabotaging intraday trading? Choose WMG coverage. Oh, nice. Appreciate you doing that, Mike. I'm glad that a lot of you guys in my private group are really considering making the switch to Tradify. Tradify is definitely at this point, I've been with them for almost 2 months now. And I got to say, I mean, I've never had a better experience with Tradeify or with with any prop firm. I've been through many FTMO. I've been through Top Step. I was just with Apex and Tradeify. I mean, man, their support is amazing. The rules are amazing. Long term, they're amazing. Their plans are just amazing. Which, by the way, you could use a code WMG um, when you go to checkout, and you can get a discount. Whatever the best discount is, that code will give it to you. Even if they're not promoting it on their site, you can use that. I don't think it's acceptable for Lightning accounts. I think I was made aware of that the other day. Sadly, that's my favorite account because I know how to trade. Anyone that knows how to trade, like that just needs capital and has the money to pay for the large fee to get instant funding, it's absolutely worth it. But of course, the challenge is the rules are much better than everywhere. So even the challenge route is pretty good. So again, you could use the code WMG and get whatever the best discount is at the time. Even if they're not promoting a discount, it's still there. But yeah, Tradeify, you know, if you've never messed with Tradeify, I mean, you really should. You should consider it. You know, try. I think they have like a demo that you can do just to like test it out. Not sure. I think they do. But I'm telling you, once you mess with Tradeify, you're gonna switch, and you're not gonna want any other ones because the rules are much better. Part of the reason I think that Tradeify has become so friendly with their rules and their pricing and all this, I think it's because they are heavily involved with the Trader Kane. He's like a heavy partner with them. I think he has had a dramatic impact on how they run things. So the rule set seems like it's perfect for someone that's looking to use the funded account in the right way, right? And if you're an ICT trader, I mean, the rules fit pretty well for the way that we're taught to trade. You know, like have your risk, you know, reasonable. Don't try to be too aggressive. That's heavily beneficial with the Lightning accounts. If you're trying to just get like $200 to $500 a day, and that's just like your goal, and you're trading with micros, I mean, it's the best. They don't punish you for being a day trader. Again, the support is really good. I mean, it's something worth looking into. I'm still with Top Step. I have a personal account. I was attempting Apex, right, to just stack on more accounts, but then I saw Tradeify, and some of my students are using Tradeify, and I was like, let me look into that. Sounds pretty cool. Lightning funding, I never heard of it. You know, first and foremost, I was looking for their monthly plans because their rules are just better. They don't change the rules under your nose like Apex does. Nothing wrong with Apex, but again, they benefit certain people. Certain firms are looking for certain people. Apex wants more aggressive traders. You know, the rules explicitly show that, while they're also kind of constricting you. Top Step, it's kind of the same, but you know, they're still doable if you like those companies or if you're with those companies already. I'm not saying that you don't want to take the opportunity if you do have those other ones, but Tradeify, if you're just getting started with trading, well, not if you're just getting started, but if you're looking to get started in prop trading and you've been trading for a while, which is when you should be looking into prop firms, not right away. Tradeify is definitely, I mean, they've literally, I've been pretty amazed because again, I've been trading with prop firms for like 3 years, aside from my personal accounts, and I have not came across a funded account company that is more responsive, more helpful with their customer support, and most importantly, trader friendly long term, right? And if once you look into the rules and do some digging, you'll quickly see that there's nothing better than Tradeify, and they're based in the U.S., so they can be trusted for U.S. Traders. Unlike FTMO, who kicked me out when I had a huge withdrawal and was with them for a year. Regulations changed and they just cut me off. It was a horror story that made it hard for me to really even want a funded account in the first place after this. But they took my $60,000 withdrawal, canceled it without even sending me an email, removed my ability to log into my account, which I had 400,000 in funding, and were very unresponsive. And now they accept funded traders again from the US. And I brought this to their attention like, hey, you guys literally viciously kicked me out and didn't give me any communication and just totally gave me the boot. You know, and I mean, you just took away a lot of my livelihood at the time. And they're like, oh, sorry, yeah, regulations changed. They're like, we wish you nothing but the best. And I was sending him numerous messages trying to negotiate with them and be like, dude, like what is happening? And then they just ghosted me. And then I hit them up again, right? Like 2 months ago to say, because I found out that they are with funded or people in the US again. And they're like, no, we're not gonna justify that. We're not gonna bring you back. You got to do it all over again. I'm like, bro, okay. So, you know, I wouldn't even recommend going to FTMO because they are vicious. A lot of these companies are. And I've never shouted out a funded company. But this time, it's totally different. Tradify seems that they have the most integrity. And I told them this story too. And they're like, well, we're happy you're here because that's not going to happen with us. You know, so they're already treating me better. There's nothing but good reviews, both just outside this community and from students in this community and some of my friends that aren't, you know, necessarily a student of mine, but they have nothing but good things to say about Tradify. So again, you can use a code WMG, or you cannot. You don't have to. Regardless, I encourage you, whether you use the code or not, to go with Tradify because they are that good, you know. But if you support the channel and you are going to go through Tradify, definitely use the code, and that'd be much appreciated. So yeah. Yes, it's hard to trust people in this industry, especially these companies. So I just, you know, with this experience that I've had, I feel like this is the time that I should be shouting out a company, whether you use the code or not. You know, some people look at the codes as a bad thing, but this is how much I believe in them. You know, I could have got a code for all these other people, but I feel like this is my way in supporting them as they're supporting me right now, you know, and hopefully I'll keep you guys updated with any company that I operate with. But Tradify might be my permanent home as long as they're around. So, and I got nothing but good things to say. So yeah. But yeah, so we don't have news until 7 a.m. So that's why I'm not really too aggressively looking at the chart at the moment. I have rules. You know, I did want to give a breakdown of what's available at the moment. And then, of course, talk about Tradify too, just for those that may be trying to get into them or get funded or may have had bad experiences. But there's not really much outside of what I've just mentioned to really highlight. Again, we do got gold and silver. It's kind of range bound now if you look at it, which makes sense because, I mean, dude, this is insane. This is a bad sign for the current economic system. It's a very, very bad sign, unfortunately, because we're not gold-based anymore, which is the dumbest thing the West could have ever done. You know, it's really, really unfortunate, but it's actually better because long term, if we do look to go this route and use gold and silver as our backing for our currency, we're going to actually have real money. Right now, we have fake money in the US. All over the West, it's a note. It was used for people that had gold and silver or other, like, well, yeah, specifically gold and silver, to go to the bank and then give them their gold, and the bank would give them a note. That's where fiat currency came into play. And then I think it was Nixon decided that I want to print unlimited amounts of money. So let's go with attaching the dollar to something that's unlimited, unlike gold that's not unlimited. There's a limited amount. Let's go get gas and oil and partner with a lot of countries in the Middle East and do all this stuff and make it so everybody that makes payments in or that buys or transacts in oil and gas, let's make it so they have to use the US dollar. And then we could just print unlimited money and fractionalize everything, debase our currency, but have it backed by, you know, belief in the system, belief in the US, and belief in the petrodollar. Now that has, well, for the past, like, what, years, decades at this point, 2-3 decades, there's been a lot of printing of money. There's been a lot of turmoil. There's been a lot of chaos and weaponizing of the US dollar dominance, right? Like against, you know, Russia and other countries. You know, some of our presidents have said that we're going to basically confiscate your money if you don't do what we ask. Any money that's in the US can be confiscated, basically. That's what they told the whole world by doing those things. And from that point on, from what, 2022, I believe, is when this happened, when the war happened with Ukraine. They ended up, you know, causing chaos over that. And all the people that don't like the US, even our allies, started to think, okay, well, what if I don't agree with the US? What if I don't agree with what's going on? Are they going to do that to me? They show that they're willing to weaponize the dollar and they basically confiscate our assets that we thought were safe in the US because it's the best market and all this stuff. So all of that has now translated to chaos, right? Fear of the US dollar. And then more so, belief and trust in gold-backed ideas and more of a gold-backed system. There's not enough gold in the world to be able to back up the amount of dollars that are in fluctuation right now or in circulation. So that's what's going to make this very painful if this is in fact where we're headed, and that's what it seems to be. Crypto, I believe, is mainstream now because we're basically getting put in a position where we have no choice. The Federal Reserve, the SWIFT system, it's going to be replaced. XRP is going to have a role in that, by the way. That's why it was created. For those that don't know, do your research. But there's a lot of things happening on the back end, and the fear of the US dollar, you know, all this stuff, it's still becoming an issue. It's just continuing to be a problem. So, you know, that's part of the fear-based decline in here that's taking place. I wouldn't be surprised if this continues for a while. We'll see. We do have a monthly fair value gap down here, and we also have a low. Could probably just use this low. It's got a little bit of this gap that's available from what we checked a while back. We've been saying that the dollar is going to continue to drop since up here. We called this whole up movement, down movement. If you go back to some of the videos, I narrated the whole move lower all the way to this quarterly fair value gap. I've had this quarterly fair value gap here for literally the whole year, and it's been used all year. Just shows you how important these higher time frame levels are, and how you need to live on the higher time frame, because then it makes the lower time frame make more sense. Good morning, Slim. Appreciate you hopping on again, brother. It's good to see you. Let's see, did anyone else? Yeah, again, I appreciate y'all hopping on. Right. You know, the longer that you stick around, the more you see the value in what's provided here. I'm not a flamboyant person. You know, I'm not going to be like an entertainer. I think it's entertaining enough to see us call something and price goes to exactly what we call for. So that should at least be what the entertainment is when you're looking at this stuff, or anybody talking about it, because if that's not the objective, if you're there to be entertained, are you there to make money or be entertained? Right? Are you there, which I can't guarantee, obviously, but you know, are you there to be a better trader or be part of some fever pitch entertainment? You know, I think the best performer is the market, you know, because you can imagine, you know, what you can do if you could tame this entertainment, right? And really get behind the right things and know what you're doing. It could change everything, about everything. So, yeah. So again, nothing's changed. I do still believe that the dollar is going to, at least for now, it's going to target this. And any of these deeper levels we'll have to deal with when we get there. But near term, we have this 2025 low that is pretty obvious. Clearly, this was a market maker sell model. Okay. We had first stage distribution. It gave us a second stage here, kind of rallied up a little bit more aggressively than I would have liked. But it hit this breaker here. And so this pretty much shows us that it went from this high to that low, mapped out equilibrium, and then came to a premium, swept out this liquidity, purged them out, and then just aggressively used the news as of late to be the excuse to continue to drop. It broke down below our 3 PD arrays here. It was the order block, the low, and the volume imbalance. It displaced through that. If you go back to last week, I talked about this, and I said that because we broke through that, it's likely, unless it gets back up above this down candle, it's likely to continue to drop, and we'll see this targeted. And if we take this out, we'll see this low get attempted, because that'll be confirming the market maker sell model is going to be completed. And again, it seems like that has taken place. You see the 25% here of the quarterly fair value gap. People that don't have this quarterly fair value gap outlined wouldn't be able to know that that is the reason price stopped, right? It could have ran up in here, and we gave it some leeway to the 50% of this down wick here, which is on the weekly chart. Okay. I think it's a 2-week, 2-week chart right there. We gave it up to that point to continue to reject, right? To give us this candle here, this assumed bullish candle, which, happened for a little bit, but it's exceedingly bearish. This is overwhelming bearishness. If it can't even get up above this candle, and there's levels above that could be traded into, but clearly we're looking to target the sell side. So bearish DXY, what does that do for the other assets? It's going to push them higher. Gold, silver, currencies, indices. All those assets should be rallying aggressively. And what happened? We've been correct, not only from that perspective with the DXY, but also correct in this, assuming the market maker buy model, assuming that this consolidation in here was going to lead to us staying above and targeting the buy side delivery. We've had the, again, contingency plan for potential shorts. If it would have stayed below this high, low, and this failure swing, basically this candle here needed to respect price. It needed to go up into it and stop, because this high to that low, like this down candle, would have been a mitigation block, which is something we talked about as well that we had to observe. And then once it got above that and then got above these levels, again, it just further solidified that this was not done going to the buy side, right? And the fast reaction from this low, right, when we looked at the weekly chart, how that was a wick, right, and then closed up above, that really drove home the point that price was going to continue. And then this one here as well, right? We failed to hit the 50%. That's exceedingly bullish, while DXY is falling out of bed pretty aggressively. And then you could see kind of what the result is. And hopefully all this stuff makes sense. This is also something we predicted too. Everything is just moving the way it's supposed to go. And I had this invalidation level here. Remember what I told you guys from weeks ago? I told you guys that if this fair value gap was to be traded above, it should act as support, and then we should be able to see price continue to go higher. If not, it was supposed to stay below that, and then we would continue to try to target this. Right? It didn't come and target that. It got above my invalidation level that I gave to you guys and was very, very clear about. And, I gave you guys the plan of what I was going to do if it got above there. And we could see that it's just absolutely ripped to the buy side, doing exactly what we anticipated it would do. And now we're reaching for the previous week's high. Took out this in low resistance fashion because it's a failure swing, right? And then this continued as well. We have a low resistance run here, so it's rapidly going up there. I had this marked off as a low resistance run for the last 2 weeks, just in case it would have held this and got above this high. We would then have looked to target that. So you guys that are currency traders, if you're gold, silver traders, if you're even oil and gas traders, I talk about that market too, right? Or those two markets, right? It's pretty much recovered pretty solidly. Well, this week has been kind of a sloppy, slow movement. But yeah, we don't have to get into that at the moment. We got to see what's happening in Iran. Depending on what happens in Iran, we may be trading oil because there may be some parabolic moves that take place. So yeah. With that being said, give me 1 second. I'm gonna go run to the bathroom real quick before the session starts. All right, appreciate the patience. So yeah, given all the things that we talked about or have been talking about, right? You can see that I have a decent amount of things on the chart. New week opening gaps, right, that are in close proximity to where price was at. That also had an impact on things that we were doing yesterday. Just as a reminder, new week opening gaps are used for quite a long time, right? Like they are important for a while. You want to have at least the last 5, but they can be used from even a year ago if it's close to where price is currently at. So that's how deep these things can go. Same thing with new day opening gaps. They're just, they're pieces of price delivery that you should be trying to pay attention to. At least have a template. Or every week, look to see which new week opening gaps, at least from 3 months ago up to now, which ones are close to where price is at, because it could act as, a further contextual idea where price should hold up. And then you kind of just take what the overall view is and you see how that fits inside of what price is doing. But again, at least the last 5, okay, per ICT's advice. And in my opinion, the ones that you could spot that are close to where price is at, you want to keep those on your chart because they just help you. They act as support. If multiples of them get violated to one side, generally price is going to want to go that way. If they're bouncing back and forth between a bunch of new week opening gaps, and you can look at the higher time frame and it looks like candles are kind of bunched together, you're in consolidation. So you want to wait till things explode, okay? And then kind of start breaking through multiples because that's a really good indication that price is going to keep going in whatever direction you're looking to see price go in. But again, my overall objective, right? We've rallied up. We have London session here. It's a very slow London. We do have the fact that price is, we're ahead of a news event, right, at 7 o'clock, but we're also ahead of the rate announcement. which from what I can see, they're not really going to do anything, so things might not change. And then, of course, we have FOMC. And then, Thursday, Friday, we have some news, but it shouldn't be too dramatic. It could be pretty good trading, though, depending on how FOMC plays out. I think that if we don't achieve these highs today, maybe it looks to decline and, try to work some of this and does not fill in these things up here. If it does choose to not do that, then, we may use FOMC to do it. Because remember what I said at the start of the call, news events act as macros on that higher time frame. So in order for something to make a pretty strong movement from that weekly chart or daily chart, sometimes it's going to require the higher time frame level plus a news event together, right? The news being used as like a macro does on the lower time frame, but for the higher time frame, right? I think I can get rid of this stuff. Hopefully you guys understand this higher time frame, and I've made my point about why price is holding at that level. I really hope that all that stuff makes sense. And again, if you guys have any questions, feel free to let me know. That's what these calls are, especially on Sunday for the most part. These days after 6:30, because it's trading and we got to stay focused. I do try my best to answer questions, but generally, it's probably best to really save like in-depth questions for the Sunday calls, because then we could just knock it out right there in great detail with no time limit. So yeah. So with this higher time frame being understood with where we're at and what we could potentially be doing, okay, let me kind of squish this a little bit so we still see it, but we're able to go a little deeper here. So we got this 1 hour chart. Okay, if we move up a little bit, let's see. So we got a 4 hour fair value gap. Ideally, price is not going to want to break down too aggressively. We have this wick here. Okay, so that wick overlapping with this fair value gap here, this lower portion, this should be the little area that's inefficient in price. So if it does come back lower, it should only reach into that, if it does choose to even do that. Ideally, it's going to do that unless we get like SMT, which we now have, right? We do have SMT at the moment ahead of the ahead of that open price, right? Ahead of the 630. So we'll see if we can get a wick down below that. I'd prefer to see a wick through that. If we keep this SMT going, then obviously price may not want to try to dig lower before it goes up there. And we're just going to have to wait and see kind of what that does. I'd like to see that liquidity purged, then see us maybe get above this, use it as a reclaimed fair value gap, and then just try to get up into that. Because then again, we'll have this leaving a fair value gap as we look to continue to run higher. Again, we have news at 7 o'clock, so we got to be cautious. Here comes 6:30. Here's the open. Let's see if we can get that move down into that and then kind of see what it wants to do from there. But we do got to keep this in line, right? We have the SMT. We got gold kind of dropping lower to take this out. I like these equal highs up here for gold. It has been on a tear, right? We filled in the whole gap in there, so it's balanced in there. Sell side, buy side. And then now we've created a type 2 dealing range from this high to that low. So should be able to get up there in a reasonable capacity. That is if it's going to continue to trend and we're not waiting for the news, right? The FOMC announcement. The closer you get to a news event like FOMC, the more risky it becomes because of the simple fact that they may wait. They may wait for those moments, build liquidity, and then potentially wait. We do have SMT at the highs up here. Kind of promotes the fact that price is going to reach into this gap I just highlighted. We have a regular trading hours gap, 50% level here. So there's a pretty sizable gap in there. Maybe it looks to reach into that, right? There's a 70% chance that it does, especially if it's trending, right? It's not too far away. It's a pretty reasonably sized regular trading hours gap. It's not too out of the ordinary. So So yeah, let's see how it treats that, if it wants to use that. Preferably, if we're exceedingly bullish, I don't want to see this fair value gap get traded through this low area, right? Because again, that is this wick, I believe on, was it the 1 hour? Yeah, 1 hour, 2 hour. We have a wick and then the fair value gap in here, right? So we should leave this open if it's going to continue to be bullish, which I believe is unfolding at the moment. So yeah, now we got a high, low, higher high. It's very close to the open, so it's a bit risky for the simple fact of potential whipsaw. So let's see what price is going to want to do here. It may create a breaker here, high, low, higher high. So let's see how it treats this in here. We did stop this out here. Like I said, it should not come down there if it is going to be bullish. We have trendline liquidity up here. It has been exceedingly bullish, right? So previous days been a large range. So that could be a little risky. But again, we're very close to the high. It spent a lot of time waiting to get up there. So again, this may be a move that ends up getting us up there. So far, we're not taken away from buys. You know, and again, we have this high, low, higher high. The simple fact that it's right at the open makes me a little hesitant to execute. And if I was to execute, it's going to be low risk because of the risk, right, of whipsaw right at the open. I'm just personally going to elect to not engage and follow my rule. And I'm going to wait till 650 happens and then see if we can catch a continuation. Let this fully confirm. And then, yeah, we'll see what happens closer to the macro. We got a failure to get to the 50% of this regular trading hours here. So that's a pretty interesting sign. Now this high or this low here, high, if we make a lower low, that puts us in position to spot a move from that being a bearish breaker to then transition to this, right, and target the regular trading hours gap. But if this all stays intact, this high here, low to this high, 50% of that should not be traded through. Ideally, this whole up movement shouldn't be traded through if it was going to continue to go. It's a pretty volatile environment. So taking this breaker and making the assumption that I'm not going to engage, pointing out the fact that it's there, but knowing from my intuition and experience that this is not a breaker I wanted to engage, you could see how that pretty solidly worked out, right? It saved me from a losing trade. And you could just see why, right? And if it gets down below this, that's beautiful because then we could look at this low, high, lower low, and the failure to get up above that, also an SMT at the highs, that could be supportive for this to be a move lower, right? So I think that's what I'm going to be focused on, the regular trading hours, 50%. It's going to be my target at the moment. Still a little bit too close to the open for me to really want to engage. You know, sometimes we miss moves because of this rule, but sometimes we don't take losses because of that, right? Just it helps you, you know, stay on the right side more than we're not. Yo, good morning, Joan. So yeah, now we got a fair value gap here. This up movement, down movement, creating this breaker, if it does form by getting below this, that should be treated as a balanced price range. And as we drop down into this, if it's going to continue to respect that, we should not be able to get beyond this low to that high 50% level. So this fair value gap should act as a breakaway gap because it's a balanced overlapped fair value gap. And then once we get below this low, this whole area should be a balanced price range. You know, and then we'll see how it kind of treats this. If it gets below this inversion here or below this low portion, right, we will have overlapped a fair value gap there. So now we're below the close of this down candle here, which is the breaker block. Right, so again, everything, because it's FOMC week, has to be low risk, right? Because it's a high risk environment because of FOMC. But yeah, this is something I'm paying attention to right now. Let's see if we can get down to that. Still got DXY going lower aggressively. Everything else is moving higher. Makes me a bit skeptical and suspicious about this. I don't think this is going to lead to a dramatic decline all the way down to here. We do got relative equal lows. And, you know, if it does do that, then it's just a testament to the fact that we are in a range-bound environment. But I'm going to assume because DXY is tanking, I mean, it's just unbelievably dropping, we should be able to see, especially because the currencies are running higher too, at some point it would turn around. But again, in the moment, at this current time, like I said, getting below this turns that into a breaker, right? So obviously it's a personal decision if you felt comfortable with this move here. Clearly the targets are being aimed at, you know, and they were narrated, so you had a chance. But again, it's up to you. I refused to execute this one here. And now I'm very curious to see how we treat this 50% level. But that right there is a really nice move, right? And I said that if we get below this, should be able to at least target the regular trading hours or simply the low of this. Now that we've overlapped that, because this is a previous fair value gap, we should be able to see that act as a balanced price range too. It should not have to come too deeply into that. And if it does, and we end up getting back above it here, that would be when I would be interested in trying to catch another buy or consider it again. For now, it's in a pretty deep retracement. Correlation is kind of a mess at the moment, right? Everything related to the DXY and the indices is dropping. Currencies are rallying. We got the indices taking, I guess they're all kind of looking to drop a little bit, huh? Again, we do have that SMT up there that I was talking about earlier, right? That SMT promotes this, right, to be pretty trustworthy, right? So we've laid out an opportunity that I said I'm not willing to engage. I told you why, because of the 630 rule. I laid out a situation where if it was to violate this level, it would reach for a particular target, that being this. So a trade that I was not willing to take based on my 630 rule. And then also the fact that, you know, there's a point in price where we're able to then get in line with a short, even though we wanted to see buys initially begin. I basically narrated when I would have changed my perspective to the contingency plan and where it would target and where the entry would have been considered to be. So an invalidated opportunity was here. I told you why. So you basically witnessed me filtering out a trade, having a particular narrative because of just the overall delivery, seeing that narrative get disrespected a little bit, falling into our contingency plan, right? Understanding why the contingency plan was going to be a good opportunity, where an entry could have been, and then the targets. So that's all the stuff that you've been able to witness at the moment. So whether you entered this or not, obviously, is of your own doing. I'm not here to get you in trades. I'm here to tell you why certain things should happen, and you use your model to get into a trade. And if your trade is the breaker, this was a beautiful chance, a beautiful opportunity. But again, we're still, for me, a little bit too close to the open. So, you know, it shows you what rules can potentially do at times. They protect you, but sometimes you'll miss a move. And this is not a week that I'm willing to be aggressive with FOMC and all the stuff happening. You can go ahead and do that if you'd like. You know, more power to you. More power to all these influencers that just wing it on every single trade. But we're not going to do that. We're professionals here, you know, so let the gamblers be gamblers. That's not to say that this was not a good move, right? Because again, the only rule that it was going against at this time was the 630 rule. Sometimes I bend that rule. But on FOMC weeks, NFP, federal fund rate weeks, I'm not willing to do that. So yeah, now that we have this pretty solid decline, we can now start to annotate fair value gaps like this. So we'll see how this gets treated, right? If it runs up through it and then tries to get back down below it, gets back down below it and returns into it, that may be something to also keep in mind. Again, we've now pretty solidly traded into that fair value gap I outlined earlier. Pretty much, did it close the whole thing? Yeah, closed the whole entire fair value gap. We do have this low, high, lower low. So we got to watch what it's going to do here as well. If it does look to trade up a little bit more, I think that we could. So I'm keeping my attention on that. Let's watch and see how this is treated. If it breaks through the 50% of this, that's another reason to believe that these equal highs were set for a purpose. And this all is potentially manipulation for the 630 reversal setup. This wick in here, if it is bearish, it's going to respect the 50%. It should not try to aggressively trade beyond that. It should hit it and then get us back below our level down here that I mentioned. That'll be a good indication that we're potentially still going to be bearish. It may look to dig a little deeper. But again, we filled in that whole fair value gap I just talked about in the 1 hour, right? Beyond what I wanted to see it do, right? It traded in a little bit beyond. So yeah, now all of this delivery, sell side to buy side, that's a balanced price range if it's going to continue and then violate this. This high, low to a higher high can also be looked at as a market maker buy model. Higher time frame is still bullish. Question is, do you have any opportunities in there that have been set up? This breaker here should turn to an inversion if we are going to go higher. So getting up above that, or since we're above it now, we should not get beyond the 50% here if it is going to be a reliable inversion. Higher time frame is still bullish, so that's why I didn't really talk about anything beyond this regular trading hours gap. And now that we've seen this, I need us to get down below this fair value gap for me to really believe that there's something there for me to execute. I'm not going to execute up in this. DXY is still dropping. Currencies are still rallying. Everything is still promoting that this is fake. And 630 has its own manipulation. We've gotten down below 630 open and midnight open. And we have relative equal highs that are beautifully presented to us above price. So narrative is bullish. Just because you see a decline doesn't mean that you're going to be looking for deep shorts. Now, if this ends up closing below this low to that high, if we get back below the 50% here and get somewhere in this level, I will assume that we're going to potentially dig into this. And then I'll classify this as a market maker sell model. And then getting down inside this level here will present me with one of my favorite pieces of delivery, which is the second stage distribution. And then buys will be, at least for the moment, off the table. But now we got to watch what it's going to do here. It's a pretty solid reaction from that. It didn't hold up inside of that quite as aggressively as I would have wanted it to if I'm going to continue to look for buys. If we break this fair value gap, again, that is a line in the sand because that may result in this continuing to drop. And once we get down below this low, if it was to do that, this whole up movement, if you move up in price, is now a bearish order block that could then also be used contextually to try to frame out something to these relative equal lows here. So this is how we real-time observe price delivery and order flow and how we go about trying to frame out opportunities. We don't just gunsling at everything that we see. This high, low, to this high here, right? We may end up seeing this act as a optimal trade entry if we were to get below this low. I don't trust this to be an optimal trade entry yet, off the simple fact that we still have these equal highs. We are in a range-bound environment, though, like I've mentioned. So it could present us with price coming back to equilibrium. It's not yet outside of the woods, right? The woods being the consolidation. We are above this candle here. This down candle plus this down candle can be looked at as a potential propulsion block. So 50% of that, if it breaks through that, I mean, that's, really telling you something. We're really in consolidation, unwilling to do anything yet. So yeah, this high to the low, if we move up in time frame, I'm sure we could find our order block. This wick, if it gets above it, that'll be a balanced price range. Disrespect of this down wick, which should have held. See how sensitive that fair value gap is here? Okay. go to the 2-minute, we could see that this is a fair value gap here too. I think I'm going to actually take that off from that wick. Then we can actually use this. So we've got that fair value gap on the 2-minute. So we're above that order block. Again, this looks to me like it's forming a market maker buy model to target these equal highs. Accumulation, manipulation, distribution. The 6 o'clock time, it may be 1 hour power of 3, right? Bullish. The open price is in here. We have accumulation, manipulation up, and then, price tagged the lower price at a discount array. And now we're starting our move back to the buy side. And of course, the higher time frame is still bullish. Higher time frame DXY is still bearish, really aggressively. We stopped just short of the 2025 low. Full target's been met overall. And we got the low resistance run for the currencies running. So that makes me really still sitting behind the buys. I want to see if we can get this to get back through these highs up there. Now we're getting, we're inside the macro basically right now. The 6:45 to 7:15, so 5 minutes before, 5 minutes after the traditional macro. Now we got another order block here. We got the inversion fair value gap here. It's now holding there. So let's see how it chooses to use the order block there. This up movement, down movement, getting up above that. If it's an order block, it should also be classified as a balanced price range. So 50% of that needs to hold if order flow is going to be trusted to go higher. And if it doesn't and it breaks this low, this high with a failure swing like that, breaking down below this low, we could use this down candle as a mitigation block and then try to look to tag deeper sell side. For now, that's not on the table yet. It needs to get down below here. We're kind of back inside this little range here. Again, I'm thinking market maker buy model more so than sell off unless it was to break this, given the overall market behavior. We do have news at 7. So do kind of got to be cautious. Yeah, I like how it's not willing to go lower at the moment. Yeah, the S&P is going higher, so that makes me feel pretty confident that the indices are going to go higher here. Yeah, the S&P is on a tear to the buy side, at least for now, ahead of this news event. So yeah, let's see what happens. Let's see what happens in this macro. Again, hopefully everything makes sense to you guys with where my head's at, what I'm looking at. Let's see if we can't get it to pop the top off this. 30 points is right there. 20 points is here. But yeah, we'll see. Because we're ahead of a news event right now, you got to consider that when you're putting on risk. And again, I'm not a financial advisor. This ain't financial advice. But that's a pretty damn good move, if you ask me. Seems pretty nice. I think 20 points was just met there. So 20 points has been fulfilled. See if we can't blow off the top of this. Yeah, we got news coming. 7 a.m. And then Trump speaks later, so shouldn't have too much of an effect. They may be waiting for Trump, though, too, if we get stuck and doesn't allow us to move. But yeah, it looks like it's pretty solid to me. So yeah, yet again, yet another call, another good entry, all before the fact, real time, in the moment, understanding of what price is doing, what it should or shouldn't do, and why. I mean, again, you spend enough time here, it becomes undeniable to see that what we do here is, I mean, it's spectacular. It really is. But yeah, your 20 to 30 points was offered there. So, in my opinion, because it's FOMC week, you know, it's probably best to aim at 20 to 30. Right? That's like the default anyway. If you can go away for the most part with every engagement targeting or tagging in 20 to 30 points, you can do pretty well. Right? It's up to you if that's enough. You know, is enough enough? Right? What is enough to you? And these are all questions that you got to ask. But yeah, it looks like we're having that 1 hour bullish power 3 so far. The 1 hour candle here, you see it opened here, 6 o'clock. And then we got that decline with price going to the buy side. It's beautiful. It's beautiful, huh? Do you guys have any questions? And there's full target, at least for now. That's pretty gorgeous if you ask me. Man. Check out Rising Students. Let me go check. Let me go see what the damage is that you did, Mike. You're quickly becoming one of my best students in one of the shortest amount of times. I gotta give it to you, bro. Like you start. When did you start with me? Share some of your experience, because I mean it's just unbelievable. You know, all of you guys, pretty much every student that comes to me, it's just unbelievable what you guys turn into. Here's proof that I actually engaged. Right down there, right where I said, up to that. Okay. But yeah, if you feel inclined or open to it, you could just share your experience while I go see what you posted in the Rising Funded Traders chat. I'm super proud of you, bro. I'm proud of all of you guys in my private group. Those of you on YouTube that have been consistent with me. You've been having amazing leaps forward, as I promised you you would. The only promise and guarantee that I can give is that if you follow what I teach, go look at the things that I tell you about ICT concepts and listen to some of the wisdom that I've gathered over the years. clarity is a guarantee. You will be able to be clear on what it is that you're trying to do, right? Or what is possible for you. You will be clear, right? And students like Mike, students like many, many students that are in my private group. I mean, there's just so many now. It's a good feeling to know that I can pass this along. That was one thing that I never thought I'd be able to do because it was so hard. Like, man, it was so difficult. Like when I think about it. But, you know, if it's God's plan, it'll work out. You just got to stick to it. And, you know, I'm trying my best to help all of you. Whether you're here on YouTube or if you're in my private group, you know, and you want to be with us doing this literally every single day, ask Mike. He's in my private group. We do this every single day. Every day. And that's not an overstatement or like a fantasy. Like, I think there's like 3 or 4 of my private group students on the call right now. We do this every day. Does that mean we execute every day? No. But do we find a move upwards of 2 to 3 a day that could have been executed if the rules are in line and if everything in terms of the circumstances align? Yeah, we do it every day. We literally do it every day. And I show it every day. They show it every day. Like Mike, look at that. Wonderful. 5 contracts. Good job, Mike. I think you're getting to the point where it's time to maybe push a little bit. I'm not going to encourage you to do that. You decide that, but I'd like to see it. You're getting confident. You're getting even more confident. You know, yesterday, another student tagged the start of the move. We call it the start of the move. Right? Again, right, Mike? Buy. Think profit taken. Think maybe closed out, break even. A little bit of profit. Yeah, I didn't. Wait, is that 5? You took 5 yesterday too, huh? 2. Oh yeah, right there. Look at that. Sheesh, I didn't even see that. I didn't even see that, Mike. Holy crap, dude. I didn't even see that yesterday. 1, 2, 3. 3 for 3. Amazing, bro. Literally 3 for 3. And you could see this. Mike started with me on YouTube in July of last year. And I mean, the accomplishments are just insane. Like if I just scroll through this stuff, look, Mike, right? We got Sebastian here, right? Some of the group conversation, banging out all of this 4 for 4. Mike, Tony, right, from YouTube. And this is just in the free group, right? Tony, Mike, right? And we got others that don't really share too much, but they're crushing it, keeping me updated, you know? But it's absolutely incredible what we do here. Like I'm telling you. Like it's wild. Really is. It's just such a blessing to see you guys thrive, to know that I'm able to connect the dots for you guys so then you can do it on your own. You know, and I'm not like all these people on the internet. You know, I'm not here to shove my lifestyle down your throat, make myself bigger than I really am. I'm just here to try to do, you know, whatever I can to help you guys. Look, and there's Maddie. Welcome back, by the way, Maddie. Hopefully everything's going okay. We got Fotis. He's been with me for 3 years or more. I think more, actually. Banging. We got Nico, one of my students, longtime students, banger yesterday. There's the one that I showed you guys a second ago with Mike. Sebastian. I mean, that is spectacular precision. I mean, you can't even argue this. And again, I'm saying that this happens every day. We do this every day. And I have my students from the private group in the call right now that would, if I was lying, would love nothing more than to call me out. But it's not, this is the truth. It's happening every day. All right, we got Nico doing it again. Right? Nico has a live stream also, by the way. He's gotten confident enough to now start doing things publicly as well, to do exactly what I'm trying to do and help others. I'm trying to make that the culture here, us helping each other, everyone pulling each other up. No ego, no someone's better than this person. I want everybody to be assets to the trading industry because there's too many scumbags on the internet. There's also a lot of people that talk crap about ICT Concepts. It's just not our responsibility to stand up, for him against people. He tells us not to. But hey, those people that are skeptical, if they see people outside of him doing this every day and they prove it, I mean, what's there to argue? It's not going to be much, and it may help them. Mike, look at that. Smacked it. Caught it. Banger. Pretty much every big move has been looked at by us. We've gotten in front of it. Byron, one of my good friends, who also helps me in the private group and helps others. Mike. I mean, it just goes on and on and on and on and on and on, constantly, just nonstop. And it's been for years, right? Like years. You can go back and look at the pinned messages, and there's messages from so long ago. And a lot of the stuff I forgot to pin since 2022. I mean, it's insane. And we're a small community. We're not a giant community, which is unfortunate because the bigger we get, the more people we're going to be able to help. Here on YouTube and in my private group, if you're a serious trader that may just need a little bit of guidance, or even a new trader that needs to know how to navigate all this stuff, my private group, I mean, it's just not only is it great because of what I'm able to share, but it's also great because of all these amazing individuals that we have in the group. They've all joined not because of me being lifestyle based. They've joined because I let the chart speak, and they see what the chart is communicating consistently. They put 2 and 2 together. They come and, be part of the group. And I mean, look at Mike. Since July, he started with me on YouTube. Since July, I mean, he has done amazing things. We have another student named Harley. We have lots of students that are in the process that are making strides, like George. We have some that aren't at the funded stage yet, but the clarity idea is starting to resonate. And so they're knocking at the door, right? Damn near about to kick it in, right? And say, yep, I'm here. And maybe, just maybe, for some of you, the day where you get to kick your boss in the ass and say, see you later, I don't need you, right? That's right around the corner as well for many of you, because of your own actions, not because of me. I'm here to help guide you to, and guide you in thinking, guide you in what to expect, guide you guys in the right way so you don't get caught up in the traps that are set for you all in this industry, not only in the industry, but in price action itself. Like today, I guarantee you someone took this buy here, not having a rule like we have that filters out moves around 6:30. It showed up there. It's convincing. Was that the one we should have taken? No. I explained why. I said that this would have been a reasonable short, but because it's outside of my rules, I didn't take it. So what did we do? We waited to verify, let price prove it. And then once it proved it, we were there to engage. All right, with no fear. All right. like I said, I don't just say things. I do it too. My students do it too. Anyone that listens to me on YouTube only, even, they're also doing it themselves too. I'm just here to help. We're all here. Hopefully, this is the culture that I can continue to build, because up to this point, it's been spectacular. I have some of the greatest people I've ever met, some of my best friends that are in my private group and on YouTube. You know, because this channel, you quickly realize whether this is somewhere you should be or not. If you're a signal junkie, hopefully this channel can help you not be a signal junkie. You know, and if you're passionate about learning to do this on your own, so you can have something that you could pass down for generations, something that could change your life. If that's something you're serious about and you're not the get rich quick type of person, you want to know every detail, why not, right? You want to be able to be consistent. You want to learn how that's even achieved. And you know your what your potential is. You just have to have a little bit of help getting there. You know, this is a home for you. If you're a new trader with this good mindset right away, you're ahead of 99% of people. You're ahead of where I was. You know, I try to quickly get your guys' mindset to where I know mine should have been, which would have helped me get to where I'm at already faster. And I feel that I've done a pretty good job of doing that. You know, and it's a filter. You know, if you want to be, you know, having someone blow smoke up your ass, put you on cloud nine with unrealistic expectations every second of every day and throw signals that most of the time don't even work, but just feels like you're doing something. There's plenty of those people on the internet. But this is not a place for that. This is a place that, you know, I've spent years creating. This is a skill set that I've spent years cultivating. So then I can end up potentially passing it on to my little brother, to my family, to my kid. And just turns out that that skill set that I've developed, the system that I've cultivated with ICT's Concepts, is something that helps all of you. And I'm very accessible. Everything is within reach versus some of these other really good traders who charge tremendous amounts, who don't even go live on YouTube and even offer this. They keep this behind a paywall because it's super valuable. And people that don't appreciate it, you know, kind of gets under people's skin. It gets under mine, that's for sure. But at the same time, I can't allow that to stop me from, you know, sharing what I've wanted to share, what I chose, what I wanted to do. You know, my students have driven the way that the private group is, you know, where all the value is. They've helped me, you know, learn more about or be able to bring myself back to the time when I didn't understand anything, you know, and then be able to serve those students even better, not just advanced students, because I serve those too. I have 3 students that have 15 years experience. I have traders that are on the that were on the floor trading that are in my private group, or 2 of them that work with me privately in a very private capacity because they don't want to know that, you know, that they're working with someone that has 6, almost 7, basically half the years of experience that they have, who's, you know, much more effective, at least for now, right? So yeah, it's an amazing thing that we got going on here. And again, I hope you guys get value. If you have gotten value and maybe you're new here, hopefully today was pretty enlightening. You guys that have been with me for a while, you know, hopefully this is all just review, just another day at the job. I know those of you that are in my private group that do this with me every day. That's what it feels like. This high to that low is a breaker. So if it trades back down into that, it should be treated as such. We're now digging in, closing in the rest of the new day opening gap. Excuse me. Kula. Oh, that's what's up, Jace, bro? What's up, brother? He said, I feel like I understand more and more slowly every day. This is where real growth happens. See, I love that type of perspective. And Jace, you started with me really recently, less than a month ago. And I think you waited a little bit, which I encourage all of you guys to do. Vet me. See if I really know what I'm talking about before you do anything with the private group. You know, because the private group is very hands-on. It's a very one-on-one based. I'm on live calls 7 days a week, right? 6 or 7, kind of depends. Saturdays I have a couple one-on-ones early on in the morning, at least right now. So yeah, 6 days. So yeah, if that's what you need, I'm also here to break down videos and watch videos with you, with the one-on-one based students. Anything you guys need, I'm there. When it comes to the one-on-one, I don't hold back like pretty much everybody does. And most people don't even offer one-on-ones because it's very difficult, very hard, because you have to basically deal with someone else's flaws and help them overcome them while teaching technical analysis, while breaking down all these intricate things that lead us to being able to target and use something like this. And not only see this type of stuff unfold, but also do it every single day, right? So it's just something that isn't offered. And that's why my private community, that's why it's done the way that it is, why it's operated the way it is. And then with my one-on-one students, I can only accept 20 max. Even that's a lot. Because I mean, think about it. I'm on one-on-ones like every day, every week, dealing with this problem, that problem, this problem, that problem, breaking down this chart, that chart, this topic, that topic. I mean, it's a lot. I wish I could duplicate myself and do more because I love doing it. That's why we have, those of you that are in the one-on-one capacity, I mean, we have calls that are like 3 hours long pretty much every time we talk. And the calls are recorded, so you get to save them and have your own little archive from the things that we talk about. All your questions have an archive and direct answers with no fluff, and whatever other things that I can share with you guys. Let me see. That's where the growth happens. Mike said, and I noticed most of the gurus will keep you unaware. Yeah. It's like a drug. They make you feel like you need to be with them. I make it so you know that eventually you don't need to be here. I hope that you choose to be here, right? Because we become friends and whatnot. But it's not a need for you to be successful, to be hearing what I have to say. I'm trying to transfer trust into you that you can have for yourself, right? Like trust in yourself and your own abilities. That's a very difficult thing to do, which I didn't know how difficult it was going to be when I first started. I'm like, oh, I could just teach them this, teach them that, and they'll be able to understand. No, it doesn't work that way. There's a thinking process that has to change. There's a perspective that needs to change. And there's circumstantial things that need to take place. There's things you got to be aware of, things you got to be prepared for at all different levels, aside from just the technicals. But yeah, we touch on everything, let me see, Mike, 1 like and 100-point move. I know, right? Isn't that crazy? It's pretty wild, huh? It's because I'm not showing a Lambo, right? But it is what it is. It is what it is. Let me see. Did I miss any questions? No. But yeah. Very interesting you pointed that out, Mike, because yeah, I see it too. I'm like, is it really worth being on YouTube? Yes and no. Because if I wasn't on YouTube, I wouldn't have been able to meet you. So students like you make it worth it. Even though it's not big, it's not the point. The point is to help. And even if it was one person listening in, I'd still be live on YouTube. But I think this 101 point move deserves a like. Because we called it before the fact too. Again and again and again. But yeah. So pretty much the whole analysis, it's really not much more to break down, really. It's pretty much doing everything that we've talked about. We have the down movement here. We see this high, right? The big drop lower, followed by displacement. We're in a rush. We're in a hurry to get up there. And so, yeah, we're in a hurry to get up there. So you can see how this fair value gap was treated, if I'm not mistaken, as a measuring gap. So we've got 2.5 standard deviations. It's up there. We'll see if we can get up there. It may leave some of that available because, again, we have FOMC, right? That is something that's ahead of us. Trump speaking also is ahead of us. So, you know, it could wait. It could use that as an excuse to wait, right? But yeah. Yeah, let me know in the chat how you guys have liked this call. Yo, what's up? My brother from India. What's up, man? I love that we're literally all over the world. I have students from everywhere. I hope you were able to see what we did today. If not, Chai, I'm just going to call you Chai, if that's okay with you. I don't want to butcher your name. But Chai, man, if you weren't here at the beginning, I really encourage you, brother, to watch what we did this morning. You know, and if you are liking what's happening, right, or how this call has been, or if you watch the replay and you know think that there's value, definitely hop on more, because I guarantee you guys, like I say all the time, clarity is a guarantee, because we do the same stuff every day. It's all the same, all the time. Yeah, Sunday and every Tuesday, Chai, by the way, we're live. And then I have a private group. We're live every day. So if eventually that's something you think would benefit you, because you want more of a hands-on access, that's available too. I have a QR code on the top of the screen if you wanted to check that out, or links in the description. But you can just stay here on YouTube, right? You'll get value either way. I just want to make sure everyone knows that that is available. And I accept one-on-one students every quarter. So the next quarter is when the next enrollment will be available. We'll see. I have to see the progress of every student. And then when they're at a level that I think they could walk on their own, or at least they have enough to be able to walk on their own, then I'll open up the enrollment for that. The first ones that are in line generally are my private group students. So, you know, anyone that is in my private group that didn't get a chance to engage with a one-on-one element, they're always going to be first in line. But yeah, to ensure that you can have a spot, obviously, every quarter, or when I do open them up, you definitely want to be a part of the private group. And that's accessible to lifetime students, not tier 1. How many students I can only handle? I mean, I've pushed it. I started off with 10. Well, first I started with 5. I felt like that was enough. I could do way more than that. And then I did 10, and I'm like, okay, it's a lot more work, a lot more one-on-ones, a lot less free time. And then I did 15. I'm like, okay, I could do it. And then I got a lot of requests. I'm like, all right, let me do 20. And 20 is a lot. It's like damn near 3-hour one-on-ones with all different people pretty much every day except one. But even that day gets filled too because I got to reschedule and all these things. So it's a lot, but it's worth it, you know. I may not do that forever because I mean it's really really hard. Plus juggling my own trading and my life. I mean it's really hard because I have to put myself in your shoes. I got to hear and be with you with the problems that you're facing in your personal life, in your trading, what bad habits you've created. I got to hold everyone accountable. I got to make personalized plans for you guys, right? I got to like determine like what the best route is with your experience. That's another thing. They're at all different experience levels. So I mean, it's because that's why most people don't do it. But I sincerely want to help as many people as I can in a powerful way, you know. And I feel like that's been a really effective way of doing that. But it is a lot of work. But I'm grateful that the students that do join me in that capacity, they really appreciate it, and we become good friends. You know, so yeah, it's an added plus, right? So yeah, because the private group is getting bigger and bigger. Yeah, it's getting a little bit bigger. I think we have like 40 people purposely. I mean, I've removed and kicked so many people. It's insane because they just don't align with the culture, you know. They don't like, you know, they just become a bad fit after a while. And I got to look out for you guys too that are in the community, right? Everyone has to be serious about this. It can't just be willy nilly, like, okay, let me just try trading. No, you need to be like at the point where you're like, I am going to do this. Come hell or high water, it's going to happen. And if this guy's going to help me and this community is going to be supportive, I want to be a part of it. You know, and that mindset, I can pretty confidently say that everyone in the group has that mindset, right? And you guys can see we all help each other. We're all there for each other. We're live every single day, so you're getting constant reps every single day. You're not just doing it alone. You get to see all the things you're studying come to life with someone that knows how to do it and other students that know how to do it. You know, and there's no questions that, you know, don't get unanswered. They all get answered. There's an answer to everything. And if I don't know, right, then I just don't know. And if something's not useful or it's unnecessary to really worry about at the stage you're at, I'll let you know that. And then it keeps you moving properly. Rodri said 100%. Also, the clarity that you give us is unmatched. Grateful to the group. Yeah, Rodri's pretty new too. He's had experience. He just, you know, he joined to kind of see what can happen, what benefits can be added, and see if we can actually help him sharpen some of the things that may have been an issue. And Roger, I'm grateful that you put trust in me, and I hope that you've been getting the value that you were looking for. We've had lots of conversations too, so it does seem like you're moving forward. So I'm grateful for that. So you're grateful for the group. We're grateful to have you. Chai said, I'm joining from a private group. So the private group itself, it's an exclusive group. It's basically an apprenticeship group where I'm live every day doing this, exactly the same as this, sometimes in greater detail for different things that arise. But we do this every single day, this specifically every day. And students that are in my private group can testify to the fact that we find something every single day to do. Do we do something every day? No, because we're disciplined. If it doesn't align like this here, right? If it doesn't align, I'm not going to tell you to get in. If it continuously does something like this, or the conditions are nasty and you have to watch out and be cautious and not do too much, those are times that we're being vocal too. Good times we talk about, and times that are less likely to play out we talk about. You have assistance in identifying those conditions, right? And all that portion of the skill set, high probability, low probability, when to manage risk in a certain way versus others, when you can push, and everything in between. Anything that you need as a trader can be justifiably accomplished in my private group. And again, it's for serious students. Let me know in the chat if any of you guys are having issues with a lag. I know Chai's saying that there's a lag, so I'm kind of curious. I don't see anything on my end. It says the stream is excellent on my end. Okay, so Chai, it's probably from your connection out in India. There may be something going on with your internet provider. Because Joan said it's not lagging. Is anyone else having lag issues? You guys probably would have let me know by now. Yeah, I'm sorry to hear that, Chai. Dang, see, we got George in Hong Kong, and he's saying that there's no lag. So it says excellent on mine. So the only other option is it's probably your connection, Chai, unfortunately. It happens from time to time with me too. It better not happen to me. I pay way too much for this freaking internet to make sure that this never happens. I spent way too much money on this thing. It's ridiculous amounts of money, honestly. But yeah, Starlink, for any of you guys that want a better internet, you should get Starlink. Because if there's like a natural disaster or anything, Starlink will still be rolling. So you'll, especially if you depend on this for an income, I think Starlink is the best option because you'll never go out. I think it kind of depends on where you're at, but then again, they're satellites, so you should be all right. Starlink is definitely it's a little bit more expensive, but I think it's worth it because last thing you want is a lag when you're engaging. Like you click enter and then it puts you out like way beyond, or you're trying to exit and it won't let you out. Oh, it's happened to me twice in the last 6.5 years. That is the worst because there's heavy risk in the market, right? It's unlimited risk. They're not just going to stop you. Oh, he has bad connection, so let's let him get out. No, it'll say, oh, you got bad connection, so goodbye account. Put you to zero. So yeah, you guys remember early on when I was saying that the S&P was moving very rapidly while the Nasdaq was kind of lagging behind a little bit. Yet in that moment, I still took an execution for the buy position. And Dow has continued to drop, right? I didn't really do much. It's still been kind of weak, right? Or interested in offering sell side. But when the S&P speaks and you're using correlation, when the S&P speaks and the asset you're trading, like in this case, the Nasdaq is not moving yet, you can rest assured that eventually it's going to follow suit. It's going to fall in line because the S&P has 500 stocks, Nasdaq has 100, and the Dow has 30. Okay? So when you're doing SMT analysis, if your SMT shows that the S&P has the failure swing if you're bullish, and the Nasdaq has a lower low, but the S&P is ripping to the buy side, you could trust that SMT. It may be a little bit slower on the Nasdaq, so it's probably preferred that you take the trade on the S&P because it has the failure swing. But you could rest assured if the S&P is leading things, the other two are going to follow at some point. As long as you're correct on the narrative where it's going to go, which we have been. Right? We've been correct that it was going to go higher. which again, we talked about that in great detail at the start of the call. So Chai, again, it's just another reason for you to go watch the replay. If you joined us a little late, pretty much after we called this move. But yeah, this call is a powerful call because we filtered out one move, which I'm sure that anyone that trades breakers probably saw this movement lower, thought, okay, that's the manipulation. Now we're going to try to get this going higher. Probably didn't take into consideration the S&P here, right, which again, the S&P, what was the S&P? No, it was the Dow. At the time, it was the S&P that had a failure swing there. Then later on, it came up, kind of canceled it out. And then again, we mapped out our fair value gaps, watched it trade through it. I said that if it's going to keep going higher, this candle is going to be violated. I think it was also a wick. Yeah, I said this wick will be traded through. You notice how once that wick was traded through, because it wanted to continue to go higher, the 50% of that wick was treated as an inversion. Remember, every PD array, including wicks, have inverse natures to them. Okay. And then, of course, we had this fair value gap. I think it was a 2-minute on top of the violation of the wick here. I said that the only way I would look to go short again, or look to take a short, is if we were to break down below this and then use it as resistance to then try to target the low down here, which was our contingency plan target. Did that unfold? No. Right? So what do? We kept pushing price to the buy side, as we are continuing to do. We have this high here, this high, low, higher high. So what does that mean? This is now your higher time frame breaker setup. So if you miss the lower time frame moves, you don't think that you missed the move, you just wait. Right? Wait for your rules to play out again on the lower time frame, or you move up to a time frame that's a little bit higher and then look to see if you can find something setting up on this too, because this high and that low, breaking this high is now a bullish breaker. It's also a balanced price range. So this high to that low, 50% of that, if it's going to continue this run higher, needs to be respected. Right? Like I said, this high, low, higher high should act as a breaker, using the low here as the lowest portion. High, low, drag it over. Or you can just simply use the high, low, use it as an order block, 50%. Should end up being a balanced price range if we are going to continue to go to the buy side. It's the same stuff every single day. We're looking at the same stuff, you guys. Again, I want to ask you guys, so if there's one thing from this call today, I think I'm going to do this every call. If there was one thing from this call today that you could point out as, okay, that made sense and it is going to be impactful, maybe you learned something, right? Maybe the most interesting thing that you've learned today. If you guys could share that with me in the chat, or something that's helped you the most today, right? Whatever the case may be, what some value that you've gotten from this call, or from just this community as a whole. Specifically though, from this call, I'd like to hear what you guys have to say about it. If there's anything that you guys think has either helped you, or something you've learned, or something that's the most impactful today, definitely leave that in the chat. I'm curious to see where your guys' head is at and what has impacted you the most, or maybe what's like been the most helpful for today, for your trust, for our trust together as a team, for price to continue to go higher. You see how this is continuing to support what I said? It's continuing to go higher. There's no need for thinking shorts. Oh, it's too far up. It's already went too far. Maybe it's going to reverse. We don't pick tops, so we don't even think that. We go off of our PD arrays, our validation principles. And nothing's been invalidated, right? We have an inversion here. It's respected that beautifully. We've closed, see the bodies? Closed perfectly in between that. And then we also have this new day opening gap that I've been talking about since December 11th. I pointed this out in December, and now we're back into that level using it. And I've been keeping your attention to this level and the upper level being the new week opening gap up here, or the regular trading hours gap. I've been keeping your attention on that for months. For months. Yeah, so we don't have WhatsApp. We don't use WhatsApp, Chai. We don't use WhatsApp whatsoever. It's just a private Discord, essentially. Yeah, we don't use Telegram. I used Telegram for a little while until I decided that, or until I had a friend. I think it was Maddie, actually. One of the Maddies in my private group, he pretty much told me about forums. And I think he told me specifically about Discord, and I think he's also the one that told me about forums, which is incredible. And so now it's super organized. Everything's just amazing. I realize that wicks can be inverted too, similar to PD arrays. Yeah, nice. Hell yeah, George. Just another weapon to add to the arsenal. Another clarity booster. Just shows you that, there's really no reason for us to be too concerned if we miss a trade or if we take a loss. Because if you take a loss trying to buy a bullish breaker and it fails that bullish breaker, the mindset a lot of times is, oh, the breaker failed, so now I don't have a setup. When in reality, if there's a logical target opposed to your main objective and your main entry gets violated, it can be turned to an inversion. So it now goes from a bullish PD array to now an inverted bearish PD array, right? And it's the same with every PD array. They all have a beautiful inverse nature to them. So, yeah. Yeah, Mike earlier said mentors generally charge upwards of $5,000 minimum, and he's not lying. Some of the best traders in the industry, if you go try to work with them one-on-one, some of them are 20,000, 10,000. We're not even a fraction of that. And you get that type of experience for life, right? Yeah, and for premium models too. Yeah. And there's a lot of added things that they do and all that. But yeah, it's the value cost proposition is so imbalanced against me with the way that I have everything set up, but it keeps everything accessible. But yeah, that was a good point, Mike. All right, Joan, appreciate you, brother. As always, I'll see you tomorrow. We're always live in the private groups. So yeah, I'll see you tomorrow. Yeah, it's almost the end of the session. We have 20 more minutes. We end at 8 o'clock a.m. Pacific Standard Time. So 2 opportunities have been given to you this morning. The opportunity, did I remove the damn thing? I think I did, huh? Say the first opportunity was here. I knocked down 40 points. Should have held it. Would have been able to capture 100. But again, rules are rules. Rules save you, but sometimes they keep you a little bit limited, but for good reason. Maddie said I'm out too. Not going to risk anything now. Okay, Maddie. I'll see you tomorrow. Speaking of Maddie, that's the Maddie I'm talking about. All right, Maddie, you have a wonderful rest of your day, brother. I'll talk to you tomorrow. So yeah, we had this opportunity in here, and then I mentioned this breaker in here. This up candle. So you could add a 30-point stop, which is generally the baseline. So that 30-point stop would have led to yet another 30-point run. 2 for 2. I told y'all, this high and that low, it should hold if it's going to continue to go higher. And we should. I haven't said nothing about shorts. I didn't say that we're too far up to worry about it. I didn't say we missed a move. Right? It hit that and now gave you a little bit of drawdown. Still inside the macro. This was definitely in the macro. You could have taken that as the larger time frame breaker that I just told you about. So technically, I actually now that we think about it, I actually gave you 3 opportunities. Right, this high up here, that being the breaker. So yeah, that's our general limit, calling out 3 trades a day, at least engaging 1. And if we take a loss, we could take another one at half risk. And then, if we take 2 back-to-back losses, which I can't even remember the last time we took 2 back-to-back losses. I can't even remember. It's been a while with 2 back-to-back. But if we take 2 back-to-back, we cut our risk dramatically, and then we make sure that until we make it back, what we initially lost, we're keeping the risk cut. And that's the regressive risk management, right? So, and that keeps your equity curve looking nice and beautiful. And it doesn't allow you to hurt yourself, right? And you stop after 2 trades, 1 to 2 trades a day. That's it. All we needed was 1 or 2 trades. We were effectively able to filter out a bad move. I actually called 4 moves today, actually, because I called this short here at this wick. So think about it. Think about it. We called this here, 30 points achieved. Called this one here, which is the retracement back to the 10-minute breaker. So that's a 10-minute setup. That ran 50 points, but all you really need is 20 to 30. Before all of that, I called this move down in here, targeting the regular trading hours gap. There's a 70% chance to get there. Once this failed and got down below this area, I told you guys that that's probably going to be tapped into, and we have to see how it's going to treat that. It went right to that. You can go look at the replay. You'll see that I have pointed all these out before the fact. Right, and this offered 20 to 30 points. Initial short. We saw this breaker, but we invalidated it. We had SMT there. It supported this move. And then we waited for this opportunity. Inversion here. Beautiful respect to this level. And then I called the buy. Right, that buy was gorgeous. If you guys think about the flagship model of this community, of the private community, those of you that are in the private group, the Razor models presented here. It's part of the reason I entered. And we got speed coming off of it, which is part of what we need to see if it's valid. Then again, I said the 10-minute breaker, and then I just talked about this one as well. This breaker, this high, low, higher high, 30-point stop, safe, 30-point stop, safe. Oh, you could have a 20-point stop. The precision's been pretty spectacular. Expectation that this fair value gap was not going to be traded to, because we have high, low, displacement, completing a market maker buy model. This high, low to the higher high, that was also a market maker buy model inside the larger one. This high to the low, 50% of that should have never got traded to, which it hasn't. Now price is really starting to pick up to our main objective. And if we go to, say, the 15-second chart, and we map this out, we have our 2.5 standard deviation. So projection-wise, that's pretty solid. And yeah, so I hope that, you know, everything has made sense today. Those of you that have stuck around, those of you that do stick around, you see the value here. We're not, you know, it's not a party every day, but it kind of is a party, because success is a party. It's something to be celebrated. And generally, success lives in the things that we do here. And again, I prove it. It's not just a wild statement. It's a proven statement. Not only from me, not only from what you see on the charts, but with many students like Mike, like George, like, Kula, right? Jace eventually, right? It's just a little bit new. Maddie, Rodri, and everybody that's in my private group pretty much, and some of you guys that are consistent here on my YouTube channel, you guys see that this is the truth. And I don't overcomplicate. It's very much the same every single time that you hop on with me, which is why the more that you hop on, the more this stuff will make sense, right? The more that you watch ICT's concepts and then come and see me apply what I use, which are very common things in ICT's arsenal. Some of it's a little more advanced stuff. Some of it's things that aren't really highlighted a lot from everybody, like balanced price ranges, the way that we observe order flow, which I've, over the years accumulated information from ICT. But, many people don't know what they're talking about. There's so much, and a lot of times people just haven't had the right guidance to piece everything together to know what is truly needed to make this an effective skill set, a trustworthy way of building an income and building a life that you want, but that's part of what my intention is to try to get you guys to that point, or at least get you to a point where you can do it on your own, because I can't do it for you. But what I can do is this, which allows for every single call to be just that much more experience, that much more clarity being added to your bank of information. And I'm not teaching a bunch of new things all the time. Once you guys see the process, it stays the process. It doesn't change. If there's ever any nuances that I have to depend on my experience over, I'll add it. But there's foundational things that I constantly press into you, and the fruits of it are seen in students like Mike, and many of my students that are publicly coming out and showing you that what we do here, I mean, it's effective and it works. And I have students that are now starting to make YouTube channels, like my student Nico. So I encourage you guys to go subscribe to him as well. Give him a shout out real quick. Right there it is. Oh, he's live right now. Right? So go give him a follow and subscribe if you support the channel. He's one of my students, longtime students, and he is pretty spectacular. He's just starting his YouTube journey with the intention of helping others and not being like all these other people on the internet, right? So yeah, you want to keep your sphere of influence really tight with people that are worth listening to. And I'm happy to say that anyone that comes out of this camp is going to be worth listening to, because I make sure of it. And they're learning from someone that, quite frankly, has no tolerance for bullshit, So yeah. But I think we'll leave it there. So with that being said, God bless you guys. Appreciate you for supporting the channel. Don't forget to like the video and subscribe to the channel if you haven't already. If you get value, spread the word. And those of you that stuck with me this long, thank you. Hopefully, again, you got value. Hopefully this week hasn't been too crazy. Remember that it is FOMC this week. I'll be live again on YouTube on Sunday. But outside of that, I'll be live again on every Tuesday, unless something happens. I'll let you guys know. But other than that, I will see you beautiful people this Sunday. And those of you in my private group, I'll see you guys tomorrow. All right, take care, you guys.